Hey, all right. So everybody can hear me. Okay, thank you very much. All right. So I have something very good for you today. But before we start, I gotta, of course, give you the legal. So I have to read it. I'll try to read it in a pace that you'll understand. Okay. So this is the risk disclaimer. The risk of loss in trading commodity future contracts, even when done via an automated trading system, can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. You may sustain a total loss of the initial margin funds and any additional funds that you deposit to a broker to establish or maintain a position in the commodity futures market. Past performance is not indicative of future results. Any specific investments or investment services contained or referred to in this website, or I should say in this presentation, may not be suitable for all investors. You should not rely on any of the information as a substitute for exercise of your own skill, judgment in making such decision on the appropriateness of such investment. Finally, the ability to withstand losses and to adhere to a particular automated trading system in spite of trading losses are material points which can be adversely affect your investor performance. Recommend investor visit the Commodity Futures Trading Commission website, the following address before trading, and it's www.cftc.gov/cftcs/cftc before trade.htm. All right, so now this is out of the way, and what we have today is a really brand new technology that really fascinated me. And I have Walter, my friend, here with me. That's been my friend probably for over a decade since I started uh, my introducing broker, and he's always been on the front of delivering really um, emphasizing things like execution, honest reporting, overcoming challenges that majority of investors have when it comes to systems and things of that nature. So what I'm going to do right now, in the little box where there's a message, I'm going to give you the site, okay, so you can follow along. I'm going to write it here. I hope you'll see it. This is the site, optimusfutures.isystems.com. Okay, and Walter, what he will do, he will take you through the site. He'll show you how to choose systems. He will show you the technology that they've implemented, and above all, what you will see is the uh, challenges that people who trade automated trading systems of hypothetical versus real also have the ability to start and stop them whatever you want, follow it in real time as opposed to getting results at the end of the day, and so forth. So I don't want to take any more of Walter's times. Walter is from My Systems. Walter, please take it away, and I really appreciate you being here with us today.
Perfect, no problem. You going to switch so they can see my screen?
You have
hear
to
me, Matt?
enable. Yeah.
Hey,
Sorry.
hey, Walt. So if you go ahead and let me go ahead and just enable the icon there for you, and now you can go ahead and take it away there with your desktop.
Okay. Hold on one second. Assume you can see my screen?
Yep, we see your screen.
Okay. Thank you for that, Matt. I guess to back up a little bit, the technology is new for people like Matt. We've been using it for about 6 years in Europe. Personally, I've been using it for about 3 years, and so we've rolled it out to begin to spread the technology. Essentially, what all this technology means, and a little bit of my history, is I've been trading systems for a long time, and so I know the pitfalls of what would frustrate clients to regulators. And so what we've tried to do is really make it as streamlined as possible and with full disclosure to our clients, where then ultimately a client can have control over it. This is different. This platform is different than other system platforms, as we control and monitor all the systems live and in the real time. And if the markets were open, you would see the screen flashing, and so everything is happening instantaneous. What I always tell people with system trading is, confidence in the platform, confidence of what we're doing, what's going to show up in your account is what's going to be posted on our platform. So, there's not going to be big deviations. Typically with system trading in the past, a developer would show performance. They would not bring in all the acceptable costs that go to a client, and then there would be differences in performance. Here, we also try to get as much transparency again as we can, and when you go back to the link that Matt shows you, especially when the markets are open, you'll see what's happening in the current session, what's happened in the previous session, what's happened over the last month, the last year, since inception. When you click on any specific system, it's going to bring up the performance. And so the performance is going to be, let me grab this other one here. If you, let me show this one. And so any system that you guys select and bring up, it's going to be the exact same format as far as the performance. And again, all these systems are on our machine, so no one's sending us signals. There's no discretion. A developer isn't sending me a signal that's going to a server and then executing for your account. Everything is from our own servers. This particular system is a mini Russell system. It's a swing system. It costs $100 a month in order to the right to trade the system. What we do with that fee is at the end of every month, we prorate the month prior, and then we charge for the following month. So there's no credit cards. We take everything directly out of your account. So if you start on the 15th of the month and you're still active at the end of the month, we'll charge you $50 for the prior month, $100 for the next month. When we load the system on, and there's tons of statistics here, and you can click on what's the worst drawdown, what does it mean? You can click on everything. But here in the performance, this is really kind of one of the most important parts of the platform is everything in white is when the system was given to us and loaded on our systems. When we do our back testing, we try to make it as realistic as an environment as possible, making money or losing money. Typically in system trading in the past, a developer won't build a commission. This is $7.50 a side or $15 a round turn. We also build in the cost of the system. We also build in what the 50-day moving average of slippage that we have gotten in this particular market. Slippage is the difference between where, if I go in and I get a signal to buy them at 10, I buy them at 11, that's $1 slippage. The difference between the bid and offer. You'll see that, well, I'll get to that. But then here's when the systems were loaded on our machine. The tan is when no one's trading the system, but we're tracking it. The green is when we have actually clients trading the system. And so if you pull up any month, it's going to then break down exactly what's happening in every single trade. The first of the month, there's the least cost that comes out. Here are all the fills from all the clients that we're trading. Every month will show you the exact same layout. We also show a trade log, which you guys can go on and look at. And so what this tells us is what the market was, what the fill is. And so we show this is the hypothetical price. This is the average price between all customers all over the world that we got, did not matter the FCM. And so we'll show the slippage. And so you'll see that our execution is pretty tight once we get signals here. And this is where a place that, again, we tell people, do block orders. This is not letter of direction business. For those who know system trading, it's letter of direction. You sign a letter of direction for every system that you have to do. You have to open up a different account, and then a broker will follow this for you. This is an actual considered a platform, so it's a self-directed account. We give you guys access to then the trading where then you can select your systems. Again, we have session logs, the trade logs, everything. Here, we even track, the total P&L. The P&L since tracked, the live P&L, the worst drawdown, suggested capital, required capital. Suggested capital with any investment is, how much, what are the percentage numbers looking at? Well, that's based off suggested capital. A lot of clients will say, well, okay, well, what's required in the account for me to trade it? That's the required capital side of it. And this is all automated. This is a system, and so what we do here is the required capital is margin plus our worst session. And so at the beginning of the day, we automatically ping the account. If there's $7,100 in, you get that day's trade. If at the close of business today, there's $6,500, although you have the margin to trade it, it's not with our rules. we will then exit the position automatically and send you notification that you've been deactivated on the system. And I'll get into a little bit more of that soon. So, that's our way of, a lot of people when they trade futures, they get in trouble because of debits or markets, or the client, or they talk the broker into trading. Here, it's a ruled setup. It also, if you go to any sort of system where the day trade, is a swing system, and so our day trade margins can be different. Here's intraday crude. Here we require $3,400 a month, and so $3,400 is based on our required capital. The margin on crude is obviously higher. Here, again, we go in, require capital $3,400. That'll give you the right to take that trade for that day. If we have 3 systems running, our required capital, let's say, is $5,000 a piece, and the account comes down to $4,000, we automatically deactivate the newest system that the client has activated. And again, the client is notified they've been deactivated. We're then, deactivation, a lot of our clients, I find, usually run about 50%. So deactivation doesn't happen a lot, but if it comes down enough, we will deactivate automatically. Matt, so far so good? Any questions from you guys?
So far, very good. I think maybe
right,
if you can show them how the... Can you hear me, Walter? Hello,
yes,
Walter?
How to start and stop a system. Yep, I hear you.
Okay. So maybe you can show them how they can go about the criteria of choosing a system. You've built a lot of parameters, how they can choose systems, based on risk capital, things like that. I think that would be very interesting.
Sure, no problem. So here, again, everything's going to be straightforward to you guys. And so we've done a number of different filters that you can sort systems by. You can sort by required capital. You can go in here and say, okay, I want to look at, we have 374 systems. I want to look at the profit and loss for the last 3 months of the systems. And I want to look at the markets traded, which is going to be crude oil and E-mini. So now I'm basically asking, what have been the profitable systems for the last 3 months for the markets? You've built your filter, 26 systems. So you can sort by the different markets. You can sort by any criteria that you want. Let's say we get into a system and you like a particular system. Let me find one with a position. So if I go, so this is in a position right now. So if I go in and say, okay, I like this system. It's a 2-step process. You go in, and right now the system is locked. You'll see systems are locked and unlocked. So this one, I go in, I say, okay, I want to buy the license. I'm going to pay $175 a month per one contract. I accept it. You sign off on this disclaimer, and obviously we want you guys to read these disclaimers, and if you have any questions, you need to give us a ring. We accept the disclaimer. So now I want to activate the system. We'll go in and it'll say, okay, I want to activate it immediately. I want to activate it better, or I want to activate it on next signal. Again, it's the decision in your hand on what you want to do. Let's say we want to activate it immediately, accept the disclaimer, activate immediately, and then now, right away, already been filled and it's in your account. And you're going to see here, this required capital is $5,800. My buying power has already changed here by $5,800. So here, this is what my balance is. Here's what my total required capital is. Here's my buying power of what I have more if I want to add more systems. And that's important too. And this is something I tell people to focus on where, I don't think people should more 50% of their money on required capital. But if you get close, one of things are going to happen. You're going to either miss a trade, or you need to send more money in, or basically to reduce your overall risk. So again, any of these systems, I'm in the system. I'm currently long a position. It shows the closest order, shows the last trade, and it might be it's a full moon, FOMC's tomorrow. I want to take profits, whatever it may be. Again, it's the same process. I want to go in. I want to stop the strategy. We do stop the strategy immediately. Don't take any more after this position is closed. What do you want to do? I want to do it immediately. I click. I deactivate, and it's going to automatically fill your order. It's been sold, goes out the open position, and here you'll see it's now out of it, and my buying power, capital, my buying power has changed. And so this gives the client, and we don't suggest jumping in and jumping out of systems. I mean, when someone looks at a system, they look at the performance over a period of time. You're not deciding which systems that you would have gone in and started and stopped, or what time. For me, and my business partner, we have different philosophies. For me, when I pick a system, I'm picking a system because I'm picking a system. I want to be consistent in my trading. I want to trade with my stops, my targets. I'm not going to be paying attention to the market, or more importantly, I'm doing my own trading, and I want to diversify what I'm doing with system-based trading. So for me, I let the systems run. My partner, on the other hand, for him, it's like, hey, FOMC's tomorrow. I don't care if the system goes on to make 10,000 or lose 10,000. For me, risk off is risk out of the market. I'm willing to accept missing profits or missing losses. So that's where the philosophy of trading system to me is very intriguing, is there really is never a right answer. What I like to preach to people is just more being consistent in whatever you're doing on however you're trading, and obviously using risk capital that you can do, whether you're trading your account, whether you're trading systems. Because again, everything is fully transparent to you. So you can come in here. This is a demo account. In the performance tab, which we don't have in the demo environment, it's going to show you exactly all your trades. It's going to show you if you're outperforming the system or the system's outperforming you. It's going to show your equity curve. We find, knock on wood, our execution is very good, that we're tracking very, very closely to our hypotheticals, and in some cases we've gotten better execution. Does that mean more profits? No. But it gets back to the discussion of just confidence in the platform. Whether you're making money or losing money, that's really what we try to preach. Say, okay, if we lost $1,200 in January, a lot of people will go back and they'll say, okay, they're going to look at their account. If they've taken every single trade, if you're deviating, obviously there's going to be a difference, but you've taken every single trade, you can go back and say, okay, I want to see what the platform says I did. Okay, I can compare my trades. Again, all right, I lost around $1,200. Hey, I'm really close. I have confidence in the platform. Again, we lost money. Am I happy? No, but it's confidence to know that as you're looking at these returns, we want to be able to map what happens. Just like when someone started trading, look, it lost $5,800 in a month. Here are the trades. And that gets into an interesting discussion too that we always have with clients is, what's the best trade? What's the best system? What's the worst system? Well, a lot of that depends on what you think. I personally have clients that want to look at what's gone on for the last 3 months because people think volatility changes over cycles. So they're going to say, okay, I have confidence in the platform. I understand, losses. I understand profits, but I want something that's working in a current environment. Other people might say, I want something with at least a year real-time track record, or I want to look at something that's made money over the last year. So that's where it really gets broken down to what they're trying to look at and what they're trying to do as far as performance is. And so here, and again, this breaks down to a lot of times people will come in and be like, God, the Dow is down, 300 points. What systems did well? You're going to notice a lot of European systems here. The DAX market in particular, that's because this was launched in Spain. That's where my partner is. That's where my developers are. And so we have a lot of DAX. The DAX is the equivalent of the S&P to us. You'll find that DAX systems tend to be, it's a volatile market. They will tend to also capture moves sometimes a little bit quicker, because a lot of times we'll get into a position in the overnight market when you're asleep, then you get the follow through within the day of the S&P. So here, when you look at this particular system, what do we know instantly? DAX trading system. It's an intraday system. It never, ever, ever takes a position overnight. You can't control the stops. You can't come in and say, I want to take a position overnight, cancel my stop. It's not the rules of the platform. it will always get out at the end of the day. And so here we know it was loaded in 2013 April. No one traded it. Then we had somebody trading it for a complete month over these 2 months. Then whatever happened, the people quit, and then boom, we had people jump back on at the beginning of 2014. And so, again, this is going to show you what has happened. Suggested capital, required capital. Required capital is $5,900. Suggested capital, $45,000. And we always track the worst session and the worst drawdown. Those are two different things. The worst session is the worst day session that we ever saw. This is trading through flash crashes and everything else, which was in 2011, we lost $4,400. The worst session helps us calculate our required capital. Usually it's 125% because we want to give a buffer in the account. We obviously are trying to fight against debits. If a debit does occur, it is a client responsibility. That's the way this world works. But what we're trying to say is, okay, we've built in enough of a buffer. We feel that, if someone's trading with obviously risk capital, they know that they can lose more than they can make and everything else. We've built this in that the stops are going to be in the market, and you can also go in and say, okay, whatever day that we had the flash crash, go pull the exact day. Go look at exactly what we did that day. It'll tell you, again, we're loading all these trades up here on a daily basis where you can follow along. And so that's the important side of, looking at the DAX markets and giving yourself exposure. And that's what we have some clients do is they'll be trading E-minis on their own. They're speculating. They're traders. Well, they want to diversify themselves to other markets, maybe crude oil, maybe the DAX, maybe the Euro stocks, maybe Russell. This is that type of opportunity to do that. But also, with this account, it won't trade in the same account as your self-directed account. And what happens is we set up a related account. We need to move whatever risk capital you're going to use for systems in that account, because that's the account that read for the balances in the account. That'll be your system account. Then you'll have your self-directed account. The system account is a view only. The only way you can make changes is through the platform because we read the account. So if we think you should be long one, and you offset it, but we still have working order, we're going to try to get you back in line with the account. And we've got all sorts of circuit breakers in there to make sure this happens. And so that's where, if you're away from the desk, you call Matt. Matt has a broker portal where he can go and say, hey Matt, I'm on my boat or whatever, and I'm in a crude oil position. He'll close it out for me, and I'll take a look at it when I get back. Matt comes in here and does the same thing. He can come in, he can look at the position, he can stop it for you, he can start a system for you. Because it is a self-directed account, it is just like you calling your broker and saying, you're trading online and you want to get out of a position. Hey, sell me a corner at the market to cover my position. It's the exact same way. All the systems will continue to trade until you either deactivate them or obviously it drops below the required capital. It will take every single trade. The commissions are all built in and they're all obviously disclosed. So if you pull up any market, it's going to tell you what the commission is. This for this one is 25 euros around. All of the platform fees are built into your commission. So there's no extra fees. The only extra fees at the end of the month is the lease fees, the cost of the system. So there's no credit cards. There's no you running your own system. There's no, to me, there's no, it makes it very easy for you where everything is done through your brokerage account from the FCM, paying the platform fees and then also paying the developer fees.
Walter, thank you.
Matt,
I got
what
a
else you
few
guys cover?
questions here from a few guys, so I'm going to try and answer them.
Go for it.
Also address a few of the things that you said. So, Mark L., you have a question here about one of my competitors. I don't want to discuss it. You'll have to email me. I'm not exactly sure what they offer. Greg B. has a good question. He said, please discuss limits on the number of trades allowed or number of people allowed within a system. Since the higher the number, the more slippage will occur.
Correct. And we've actually built, I am very big into automation. And that's something, and we also want to protect the performance. And so we gauge that off slippage in the market, slippage on a system. And so it's a proprietary model for, I kind of hate that word, but it's going to be based off the system in the market. So if we start getting, essentially, 5 to 10% more slippage, which is going to affect performance, we will actually close the system and then create a waiting list for people to get back on. And so we're very sensitive to those numbers. We really have not, we had some of that happen with some DAX systems in Europe that got really popular, and we were doing a lot of trading on it, and so we had closed some of those, and so we are very conscious over that. I with the original question that Mark was asking, but what makes this truly different than other platforms is we run the systems on our servers. We have monitors on them. We have, we don't, it's not like, Collective 2, which is different, or Strategy Runner, which is different, where systems have to come to us. We have to approve to put them on our platform. We're not going to put them on our website if we can't run the code and create our own performance and do the execution going forward. So I would say we're kind of the eyes and ears of the trading system business, where, if someone doesn't want to give it to us, well, then my platform is not for you. So that's a really important point, because, again, I've done this a long time where I have developers send us signals, they go through a drawdown, they go back and re-optimize, they change the numbers, clients get upset, brokers aren't going to deal with it anymore, we move on. And so, for us to have the ability to this is a little higher than, we actually have co-located servers with the CQG API, where we go directly into your account on all the execution instantaneously.
Walter, thank you. I'm gonna. There is actually another question. It's actually coming from Rick Kubaka. Seems like all systems go from zero at inception, 2002, approximately to approximately 350,000 in 2015. Am I saying it wrong?
I don't understand the question. Say that again. I'm sorry.
He says that
how far we go back testing?
He says it's starting at 2002, right? I mean, I think Rick is just looking at one system. I think, Rick, there's a lot of systems there. I think this specific one, maybe, basically you're calculating all the one that he's actually showing, but there's about 300 systems there, and they're all different. Okay, Richard Novak. Okay.
And one thing, just let me clarify one thing, Matt. The difference in back-tested performance is we go back as far as we can. Some systems will only go back to 2005 just because certain indicators weren't available going back to 2001 that the system uses. And so we're not going back to only a certain amount of time to make the system look better. We're going to go back, well, here's a perfect example. I could have cut out these first 2 years. And, we want to go back as far as we can, as far as what indicators have been derived in order to trade the system.
Okay, let's go. Very good. Okay, let's go.
So go ahead, Matt.
That's very good. Okay, I have a question here from Richard. How do systems perform when trading high volume markets that are moving very fast? Example, E-mini S&P following an FOMC yesterday.
We can look at, that's where you can see all of the trades. Oh, this one doesn't, it's only on the second. And so that's where you can go in and say, okay, what happened on this particular day? Did this system either have a trade or how did it perform? And so that's where we list this stuff, because this is all open. What you're looking at, the only difference between a demo account and what is happening on the website is just starting and stopping a system as far as showing you guys. So you don't need a demo account. You can go in and everything is fully disclosed. You can go and say, okay, how did this system perform on this certain day during this certain event? You can go find that specific day and see, did the system even trade? And if it did, how did it do? How did it handle it? So that's where all of this clicking on any day, I can't remember, when was the flash crash? I can't even remember. But you can go and select a certain day, and it's going to show you exactly how the system performed.
2010 or something. I think it was May 6th, 2010.
Yeah, so if you go into the DAX, what, May
exactly.
2010, oh wait, whoops. It's going to break this down. Again, good, bad, or indifferent. And that's one thing, too, that you're going to notice is you will see different versions of the same system. And that's the other thing we protect, again, the developers is, if a developer goes, they put a system website, they come back and say, hey, I've made some changes. Well, typically, okay, what's the change? Is it a material change? If it's a material change, then we have a new version of the same system that goes up on the site, and we start the track record over just like it was a brand new system. Because that's one thing that has been extremely frustrating with developers over the years is they go through a bad month and then they want to, like here, they'll go through here and they'll say, oh, okay, well, I want to optimize it. And now instead of losing, moving your stop 3 ticks one way or 3 ticks the other, now it lost 2,000 instead of 7,000. They changed their track record, but that's not what happened in your account. That's not the reality of what happened. The reality is we were trading the system. Well, no one was trading this month, but the reality is the system lost $7,300. So we're not going to change that. If you make a material difference, then you'll notice a different version to the system that we're going to show you.
Very good. Okay, I'll continue. We have a few more questions, if you don't mind. And yes, actually, Thomas here, one of our customers, mentioned it.
Go ahead, no problem.
6th of May 2010. Okay. Richard, this is just a note to Richard. Richard, you asked here like 7 questions. I can't answer them all. I gotta give everybody a chance to a chance to ask a question. So the next question I'm choosing is from Jacob, and Jacob says, could you give a few examples of potential gains with the system if we invested, say, for example, 25,000?
I mean, you can look at, that's what we do as far as required and suggested. So here, suggested capital is 45,000. If you were to trade it with that, these are your percentage gains. If you'd put in 25,000 and traded a 2-lot, you can see that it would have made 20, or could have lost, obviously. So that's where we set the numbers per one contract. From there, you can come up with any, mix or match. It's just like when you notionalize your trading. You put, if I say I need 100,000 in the account and it makes 50,000, you've made 50%. You put 50,000, it makes 50,000 on the cash level, you've made 100%. So that's why everything here is based off one contract. There's no tiering. There's no, if I start with 6,000, then I'm at 12,000, does it automatically go to 2 contracts? No, everything's one contract, straightforward, so you can do the math on any size of an investment that you like.
Very good. Okay, next question. This comes from Geo Lems. Okay, what's the difference between tracked P&L and live P&L? Well, I think as Walter emphasized, as you see the numbers there, the numbers that actually are not colored on every system are the ones that are hypothetical numbers. The ones that are yellow are actually ones since they start tracking the system. And the green ones are the ones that actually have traded live and they come very close to the P&L that the customers have experienced. So you can clearly see the difference there. And then it would also give you the idea the difference between the hypothetical model if the real model keeps on following the hypothetical model in terms of consistency, in terms of wins, losses monthly, and so forth. Okay, things like that. One thing I want to just highlight here, because a lot of Optimus customers. Yeah, go ahead, Walter. If you want to mention something, please go ahead.
Basically the back testing, we build in the criteria of commission, slippage, cost of the system. When we're tracking it, it's the same thing: commission, cost of the system, and the slippage. When it's real time, we're building in the commission and the cost of the system, but now we're using fill price of all of our customers, no matter where they trade. So that's the difference in the criteria. And then again, here you can look at the trade log to see what that average was. You can see sometimes we get very positive, sometimes we get negative slippage. It's a function of the market, but we build that in to what we're doing.
Okay. Okay, let me see. There's I think I don't see any more questions, but one thing that I wanted to emphasize, many of the Optimus customers are self-directed customers, and so they approach the market from their own experience, from
Sure.
webinars like this that directed at self-directed customers, books, and everything else. But one thing that you will see from the systems that Walter has been showing here and the returns, and you see a lot of fluctuations, right? You see positive months, negative months, and so forth. And I think there's a misconception out there, and it's still going on. And I don't know how to break this misconception. Is that there is some sort of a consistent, return that good traders have. Like a trader makes, I don't know, 5,000 a month, or he makes 5% a month, and maybe over a long period of time you can average it as such. But I think from what Walter shows, in my opinion, most good traders or good methods, whether it's a CTA or an automated trading systems, are um, are ones that are basically, are not consistent a month. If I look at track record of CTAs, for example, commodity trading advisors, or any good methodology, let's say for that matter, you would see that there's big fluctuations month to month. Now, one of the things that I will do personally with the Optimus customers is, I will basically work with you individually to help you choose the system that is appropriate for your risk capital. And the idea is not to go after the most profitable system out there, but the idea is really to choose a system that fits your risk tolerance, so you can live with the ups and downs and the fluctuations and so forth. Walter, can you bring back up for a minute that system, the last system that you've shown? Because I want to show I want to show the guys
I
something
don't
which is
remember. Oh,
really
this one?
important. Okay, yeah, 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 this one, perfect. So here's something that I wanted to show you, which is very, very interesting. My experience, okay, that people come in and they want to experience positive months all the time, consistently. So it's very interesting that the first month, since this system went live, the guy made 2,700. Then the next month he lost 2,200, and then he quit. Like I bet it was just one customer. And look at the next month, it was 4,639. So for me, I mean, if I was to advise somebody on choosing a system, you would choose it with the right amount of risk capital. We'll look at the worst case scenario that the systems have done. We'll look at the track record, the real one that has, for example, all of 2014, they have been trading. So we look at the worst month that's been there. Let's look at the worst month. Okay, so the worst month has been a loss of $6,000 in February, right? I believe that was the case. And there was another bad month in November. Okay, so at least now we know what we're dealing with. We know the risk capital that is required to survive it. So, of course, it's very unpleasant when a loss like that occurs. It's not a nice feeling. But the market is not a nice place. It's not there to comfort you or to tell, or is there to give you what you want. It's there and it's numbers. So it's very important to approach it in a very methodical manner. You look at everything there. Now, if you look at the loss of the $6,000 across, for example, the hypothetical numbers, okay? Now okay, so now I know what I'm dealing with. Is something like that has occurred before? It didn't occur before, and from there you basically decide. And you see in real life trades in March, it had a really good month and it recovered, and then it had another good month in April and so forth. So all those numbers are very important to look at. Okay, we have Jack with a question. Okay,
Well, and if I can add one thing
P&L
to that
shown is
too, I
net.
mean, again, go ahead.
No, I'm just saying we have another question, but please go ahead, interject.
Go
I
ahead.
love you. Give me your feedback, please. I'd love to hear.
I mean, that's one thing for me personally. I started in the trading pits of Chicago. I had three brothers down there. For me, I was not personally, again, this is just my personality, was not a very good trader because I was full. I called the market right. I knew where it was going. I ended up getting scared. I ended up getting out, and that's why I looked for systems. For me, personally, For me, I'd rather look at a system. I'd rather say, okay, I'm going to put $15,000 towards this investment because I know $10,000 is the worst drawdown. I want to keep a buffer, and I'm not going to stop trading until that number hits. And so that's where it comes of being consistent. If you look at the worst drawdown of, in March 2014, then look at how it rebounded out of that drawdown. And again, that's another way some clients look at systems. They look for systems that are in a drawdown. Hey, I'm in a drawdown. Hopefully, knock on wood, statistically, if it comes out of that drawdown, that's going to be new profit for me, and hopefully we go on a good run. So for me, I'd rather be more of an analyst. I mean, if you look at TradeStation, and TradeStation, I was one of their early developers. I know the founders. I've been out with them. I've been with them. I used to speak at their TradeStation worlds, and if you look at TradeStation, it was a great tool if you were the kind of the scientist that could sit there and write easy language code, that could build your own systems, which again, that wasn't my forte. My forte is to say, okay, after I understand the testing, I understand what I'm looking at, now I can make a better decision on where I want to invest my money, knowing I'm going to be consistent. If you're someone who's going to, start and stop a system every day and think you're smarter than the market and everything else, well then this probably isn't for you, but I can also probably guarantee that your personal trading probably isn't going as consistent as maybe what this is going to do as far as wins and losses. I think, Matt, what you're going to ask, is this all net P&L? Absolutely. That's everything we talk about. This is after, if you look at any month, this is going to be after the cost of the system. It's going to build in slippage in the market where we're at in, and it's going to take into consideration the commission. So there's no extra charges or extra fees that you're going to see at any time except at the end of the month of the lease fee coming to the account, which we obviously build in the track record on the first day of the month. Your turn, Matt.
I think we're losing you there a little. Walter, you still there? Can you guys still hear me? Oh, you're here. Okay, we lost you a little bit.
Yeah.
Okay, so let's see. Jack, Walter just mentioned that the P&L shown is net of commissions. The monthly fee is different. Oh, yes. Is the monthly fee incorporated into the net results?
Yeah, that's what, pick a month. First day of the month, lease cost.
Okay. Okay, there you go.
Absolutely.
There you go,
We
Jack.
built all of
So
that in. Everything is built in.
Wow, that's fantastic.
Correct. And the licensing fee can be different. And the licensing fee can be different between systems, but it doesn't matter. It's still like, what is this one? Here's, okay, first day of the month. Look, $70 on the first trade. This was the P&L on the, here's the cost of the system. He actually made this after paying the monthly fee. So everything, I mean, that's what my whole, confidence in the platform, whether you make money or lose money, to me, that was always the frustration for my clients in the past, is a developer changes. It doesn't, a developer comes to me and shows me a system, and he's like, oh, I don't put in, I mean, I could tell you every excuse by developers. I don't put in commissions because commissions can be different between the brokers. Okay, so you're going to drive a car without gas? Like, that doesn't make sense. You're never going to change the oil. You're never going to have a flat tire. I mean, it doesn't make sense as an investment side of it. Here, we want to say, okay, we're building in every possible scenario that we can even think of. I mean, if you think of it, when we first started talking about, we even build in slippage. The bid and ask in the market. Everyone here has traded with a stop. No stops always get filled on their price. There's always going to be slippage. We say, okay, we'll build that into the performance. We are going to assume in our back test here, if you look at all the white, we've made an assumption that we're going to get slippage on every single trade that we execute. Does it happen? We all know it doesn't. Can it be positive or negative? Yeah, of course it can. It's a function of the market. But we've made that assumption. We say we don't care. We're going to make an assumption that we've got slippage on every single trade, and even from the walk forward, the tracked or the back test, and we build that into the numbers.
Very good. Okay, guys, do you
First
have
day
any
of the
more
month,
questions?
$70. And that's one thing. If you guys have more questions, I mean, shoot Matt an email. I mean, Matt and I, we work together. We're a team. You know, no question is silly, be redundant, you know, whatever it takes. You know, please ask as many questions as you want because, again, it comes back to we just want people to have confidence in the platform.
Very good. Very good. Do you guys have any more questions? I did put my email here. It's Matt at Optimus Futures. Everybody who has attended this webinar will get an email from me of the recording of this webinar, so you can look at it one more time. Also, you can ask me all the questions. Then following that, we can then then you guys can schedule with me a one-on-one to choose, to go through any system that you like, or I can recommend and so forth. Now, just to make one thing clear, when I choose a system with any person out there, I really take into account his risk tolerance, his risk capital, and things of that nature. And also, if you're trading your own account and you wanted to diversify, basically, you tell me, Matt, look, I'm trading E-mini S&P and so forth. So maybe we choose a method in a foreign market, or if you're trading all markets, then maybe we just choose something that is different than yours. Maybe you're a day trader. Maybe we can choose swing trading. So the idea is really not to replace what you're doing. I find that a lot of people are. That's just my opinion. I think majority of discount traders are paralyzed. I think they're look at the screen all day and they don't know what to do. So they just kind of follow the markets for hours and hours. Sometimes they don't have the ability to pull the trigger. They don't have a methodology which is fully developed and so forth. So this could come in place for somebody like that. Again, my idea is not to replace what you're doing, but just to help you diversify and so forth. So, Mark, please get in touch with me, if you have any questions and so forth. You guys have any more questions? I'm going to put the site here one more time, okay, just for those who maybe came late. Um, somebody's, okay, this is the site. Richard, you're most welcome. And I mean, I didn't read all the questions, but I just want to tell you one thing. You can I saw some question here that that the results might on the system, it's not what might be in the future, or some months could be in the future worse than what it's shown, even if it's traded live and so forth. Absolutely, anything can happen. But I also say that you can always poke holes in everything. And if you want to do something, you just keep on poking holes at it, and you find why not to do it, which is fine. It's not for everyone. I understand some people are just simply fascinated with analyzing markets and systems and breaking everything apart, but yet they don't participate in the market itself. And I'm not saying it because there's just people like that, which is fine. We respect that. The reason for this presentation is really to show people who want to participate, want to be active, want to take part in the market, understand the risk, and want to basically take advantage of the market. In any case, are there any more questions for me or Walter? Okay, I guess not. Walter, buddy, thank you. Really appreciate you being here with us.
You're welcome. No problem.
Keep on building good things like that. It
Anything
was
I can do to
really,
help,
really,
and keep
really
the questions coming. Matt, Matt can get a hold of me anytime, and so happy to help.
great. What I was about to say is that this kind of tool was really necessary in the industry. I always believe in transparency. I I understand really, really well when you say vendors change performance and they say I have a new system. And here you have something that they stick there. You trade it. They don't have the ability to intervene or change or become emotional with their systems. I think it's a good thing. In any case, guys, that's it. I wish you well, and
Past performance
you
is
know,
not indicative of future results.
John is actually, yes, There's a risk of loss in futures trading. Past performance is not indicative of future results. John, if you can throw back the disclaimer again, that would be much appreciated. Walter, thank you for everything, and guys, thank you for participating.
All right, guys, have a good day.
Okay, thank you. Okay, John, thank you. Yeah, that's the risk disclaimer. So again, everything here that's been said, just remember there's a substantial risk of loss in futures trading. Basically, we only want to operate with your risk capital. You should not invest anything that you can't afford to lose. That's basically it. Okay, so best of luck to you guys, and we'll see you next time. Okay, thank you.